whether we could take advantage of the current market. All right, so this is the 4-hour chart. It has been updated to the current price action. Okay, so we believe all the labels are now have been rounded up and they are correct proportionally and momentum wise. All right, so let's go very quickly over the count. There is a lower degree 1-2 here, which means that the current uptrend is a level 3 shown here in white. You're having this level 1 in white, then there's a level 2 in white. We're now in wave 3 here, okay, in white. That wave 3 already did an internal 1 and an internal 2 at that neckline and then broke out above higher degree level 3 shown here in green. This means that we are in an extension, okay, because of course of the breakout. So we really cannot expect to have deeper retractions. This is the logic behind the current move. So right now we're doing a 3 into 3. We did a 1 into 3 here. The breakout is always a 3, a wave 3. We just have to determine which degree that is. So this is now a white wave 3 here inside an internal degree higher wave 3 inside the higher degree wave 5. We don't want really to go into so many details. It has to be with ratio proportions, but because we're doing a wave 3 here in green and a wave 3 here in white, then we have a multiple confluence in cycles. Retraction will not fall below this neckline that we're showing here at level 1. Okay, so let's go again over the count. There has been a sort of higher degree wave or internal degree wave 1-2 here. All right, the market is currently doing a wave 3 here showing white. We will probably now be always contained inside of this Elliott channel. Now that wave 3 in white already did a 1-2, it did a 3-4. Because we just said we are in an extension. Well, of course, we're just going all the way up into 5 now. This 5 here in green will follow that 3 in green. This 5 in green takes you either to 4,628 or 4,732. These are the current projections from top of level 3 here all the way down to level 2, the start of the wave. Okay, so we're in a degree 3. This neckline shown here in yellow will hold. We already did the 1-2. The current market is supported at this neckline, we believe. We would want to buy therefore 4,150 because we expect that retract. We're gonna take this down to 15-minute time frame, shorter term time frames, to see the exact build up inside of this inverted head and shoulder structure that we're showing here. Very small head and shoulder structure inside of that Elliott wave, but we would consider that we have an established fact that the markets will be moving higher, so we're simply buying at the neckline. We're looking to buy at 4,150, take it all the way to 4,600, maybe even 5,200. Remember this projection, we had it on the daily chart. Okay, so what about stops and what about how are we going to protect our position? We want to take a look at these arrows down here. There is a green arrow, very strong green arrow here, and a very strong red arrow here on the momentum plot. That green arrow here shows that we're going to be having a higher head. We just established that we are in an extension and therefore naturally we should be having a higher head, at least 127.2% above the old head. So that's why we're looking at 4,732, 4,808. This here is 127.2%. Let's take a look at that red arrow here. Okay, so on a very strong plot of momentum, suddenly the market just falls below oversold, falls very sharply below overbought, and you have this very strong spike. Okay, so that spike actually bounced at the top of a level 1, $3,000. It fell all the way from 4,000 right down to 3,000 in 4 hours. This is one candle, right? So probably it even fell in an hour. All right, so this could happen again. Probably someone just tweeted something over the wires, over Twitter, or some fundamental development just impacted price. So we have to protect ourselves against such volatility. It could happen again and suddenly. All right, so we would be already long at say 4,150. Now if there is this kind of crash, we have all of these internal necklines. We've been doing this for several weeks now because we want to be very conservative. We want to hold this all the way to 4,600. Then we will not. We are only going in buying half of our normal size at that level, 4,150. If the market should crash or suddenly deteriorate, we will only add at the top of level 1 here at this red neckline. We will stand out of all the internal other necklines. So if it's an internal degree 1, we will not add here. It is possible if we have a confirmation on a bounce at the red neckline, then if we break above that internal level 1, then we could consider to add here, or even at the market top at that level 3. All right, but when the crash is occurring, might not be there. We will just have another limit entry order long for half of our estimated size at the top of level 1. That white level 1 here, because usually a degree 3 would test the top of 1 in an uptrend. Okay, so this comes in at 3,200, maybe even a bit higher, 3,250. So over here we have our risk management matrix. We're looking to buy market right now about 4,150 and add at 3,250. So we have to work our money management in accordance with buying half size at the top 4,150 and complete our full size at 3,250. So suppose there's no crash or there's nothing whatsoever, we take 4,150 all the way to 4,600. This is that level here, 127.2%, 4,628 right beside that edge here, head. This will yield around $450 if we are holding only one coin. Okay, so if we let it run all the way to 5,200, it will of course yield 5,000. We're buying around 4,200. We take it all the way to 5,200. It will yield $1,000 for one coin. Now, suppose we have that crash. We're going to be adding at 3,200. We're going to be averaging 3,675. If the momentum plot is not strong, okay, so we will bounce out of level 1 here, showing white. At that point, we're seeing, of course, a head, and we're seeing shoulders, left shoulders shown here in yellow. There will be, of course, right shoulders probably also here indicated or denoted in yellow. These right shoulders come in at 3,880 to 3,850. So if we are holding 3,675, 2 coins, because we'll have already bought one coin at 4,150, one coin 3,200, we expect to go out on a bounce at neckline here level 1 at 3,800. We will actually be making profits of $250. If the momentum picture is good on the 1 hour after that bounce, we will hold, of course, for a higher high. The yield at that point, of course, is, we've not really showed it, but would at least break above $2,000, we expect. Okay, so let's go now to internals and see how we're going to be trading, what kind of signal we have, so that we would want to join the market now if we're not in. So our estimated size before we go live is going to be about 2 coins, one coin at 4,150, another coin at 3,200. Usually if you are going to be using 2 coins, this will, with these current stop levels and bounce levels, entry bounce levels, you'll probably be risking around 6 or 7%, which is $600-700 floating loss on a $10,000 account. Okay, so let's move to trade action now. This is the 1 hour chart. This is current market action. This has been segregated. We're looking here at a 1 and a 2. The market should be moving higher, doing a 3. Okay, remember we're going to be probably contained into that Elliott structure. That 3 can move higher all the way to 4,410, but it's not doing so at the moment. It is actually correcting towards the neckline, so we have a buy opportunity. All right, so let's take a look at the pattern first. What are we exactly looking at? We're looking at a head here, and we're going to be having another head higher when the market moves higher. Okay, all right. If the market should move lower, it's correcting towards that neckline, we recognize that the current momentum count is shown here in very small yellow letters. It is related to this correction going on, or this momentum plot going on the 1 hour chart. All right, so we have level 2 here. Yes, we have a level 2 here, we have a level 1 here. Okay, so this is the 1, 2, this is the 3, should not really fall. We have, of course, a neckline here, so we didn't label the internals, but Internally, you're looking like we're having an internal 1, an internal 2, an internal 3, an internal 4, 5. Level 3 up here should not really fall much below the neckline. But let's take a deeper look. Okay, so the deeper look indicates that over here things could get demoted. That neckline could run lower right down here. We're having the 1, 2, we've had a 3, we've had a 4, we've had a wave 5. Any correction down will bounce, and that is the very best entry that we could actually get. It also, of course, meets with the lower boundary of that Elliott channel and at the top of a 1. This takes us to $4,000, around 3,986 to be exact. Of course, we would want to be a bit higher than this to allow for spread. So we're looking at 38.2% of the entire move from 1 right down to the stop